is when I will make the motions with respect to the consolidated financial statements, and then we'll move on with the item D3. Okay? All right.
We're good. We're live.
We're good?
Yep.
Okay.
Thank you.
We are back. We are live and in person. Moving to item D1. So, Ms. Biswa, thank you for joining us by Zoom, and the floor is yours.
Thank you. Good morning, everyone. Just would like to take a few moments to introduce our guest speakers for the morning. We have now completed another year of a successful financial audit. It was a clean audit with no significant findings. I'd like to thank my finance team for all their efforts in getting us to this point today. There are some rock stars present in the chambers at this moment as well. Wave, Rick, Carla. We have with us today Mr. Calvin Scott and Ms. Michelle Lutz, our audit partners from Avail, chartered professional accountants who have audited our financial statements and are here to present the results today. So our recommendation at the end of the Avail's presentation is that the Finance Committee, it's on the next slide, Cheryl, please, that Finance Committee approves the audited financial statements and the FIR for the year ended December 31st, 2022, and accept Avail's reports as presented. Over to you, Mr. Scott.
Welcome to Canmore and today's Finance Committee meeting. Whenever you're ready, the microphone's yours.
Okay, thank you.
And
it's on? Okay.
And I'm sorry, I didn't quite catch your name.
Michelle Lutz.
Michelle?
Yeah, Michelle Lutz.
Lou?
Yeah.
Welcome.
I'm the manager on the Town of Canmore audit, and I've been involved since 2016. So
Great.
Started out as the in charge, and here I am today presenting to you guys.
Awesome.
Okay.
There we go. Whew.
So what I'm going to be covering this morning is going to be the independent auditor's report, the financial results, the notes to the financial statements, the indicators of financial condition, the management letter, and then the post-audit letter. So starting with the independent auditor's report, it states that we gave a clean opinion that the financial statements are presented fairly in accordance with the Canadian Public Sector Accounting Standards. It then goes on to note that management is responsible for the statements and council is responsible for management oversight. And then our responsibilities as auditors is to identify and assess the risk of material misstatements. We understand the town's internal controls. We evaluate the policies and estimates used in the financial statements. We conclude on the going concern assumption, and then we evaluate the overall presentation of the financial statements in accordance with those accounting standards. But at the end of the day, a clean audit opinion was given. Any questions with the auditor's report?
No. Okay. And feel free to just move the microphone down a little bit, and then it picks up even better.
Okay?
For you. Yeah,
Okay.
yeah. Exactly.
Excellent, thank you. Okay, so next for financial results, starting with revenue. Overall revenues are up by $8.3 million. The highlights are taxes are up by $2 million, which is in line with the budgeted increase. User fees are up by $4.8 million, and half of this increase is just due to the increase in utility rates, paid parking for the full year, and then the recreation activities picking up after COVID. And then the other half is going to be due to the increase in home sales and housing. So this year there was 17 units sold, where in the prior year there was 11 units. And then government transfers for operating are up by $136,000 due to the mountain pine beetle funding. Investment income is up by $450,000 as a result of the improved rates, as dependent on the type of investment, as well more was just invested as well. And then development levies are up by $525,000 with the continued growth in large developments in Canmore. Franchise revenues up by $510,000 with the increase in the ACO and Fortis fees, which is just which is consistent across all municipalities. And then rental is up with $380,000 due to the COVID restrictions lessening. And other proceeds is down by $430,000, which always varies each year. Generally, this line item includes insurance proceeds, donations, and one-time funding. So last year included one-time COVID revenue contributing to the decrease over prior year. And then on the expense side, overall, you'll see expenses are up by $10 million. Admin is up by $1.5 million due to the turnover and vacancies in IT, which just led to more contracted services and salary increases, as well as there was litigation costs for the Three Sister Mountain Village properties included here. Other protective services are up by $1.5 million with the increased RCMP costs with the population increase, as well as the new paid parking program. Road, streets, walking, and lightings are up by $850,000, and this is due to the work on the railroad crossing, electric charges, and general increase in repairs and maintenance. Public transit is up by $300,000 due to increased service levels in transit with Rome, with more tourism due to COVID lessening. Utilities are up by $750,000, mainly due to the increase in rates. Waste management up by $325,000 with more people, more usage, and higher costs, as well as amortization is up by $150,000 in this category. Public housing is up by $1.8 million with the increased number of homes sold, which is consistent with the increase in revenue that we saw on the previous slide. And then other recreation and cultures are up by $2 million with more staffing due to more traffic with lessening of COVID, and some of the costs relating to the elevation place repairs are also allocated here. So then to summarize, revenues are up by $8.3 million. Your expenses are up by $10 million, which results in a decrease in operating surplus of $1.8 million from prior year, going from that 3.7 down to the 1.9. Under other, there was less capital this year, which results in less revenue, and we will be running through the capital projects shortly in a little bit. And then contributed assets mostly relate to the Spring Creek land and utilities. So overall surplus is coming in at $15.8 million this year versus $23 million in the prior year. This includes capital revenue, amortization, which is a non-cash expense, and contributed assets, and it does not include capital expenses, debt repayments, or transfers to and from reserves. Pelkey will present the bridge that accounts for these adjustments, so actual operating surplus for the town alone comes in at $1.1 million. Any questions with the revenues and expenses?
Nope, I think we're good.
Okay. So next, for the statement of cash flow from operations show positive cash flow of $33 million, and this just represents cash being brought in from the town's day-to-day activity. The statement then shows that the town then spent $20 million on capital, cashed in $5 million of investments, repaid $5.5 million of debt, which leaves the town with about a $14.5 million cash surplus as of December 31st, bringing cash at the end of the year to the $62.5 million. Then for financial assets, they are overall up by $8 million. The highlights are cash is up by the $14.5 million as per the statement of cash flows. Accounts receivable up by $900,000, and this is mainly due to the increase in accrued interest of $340,000. GST is up by $350,000 as there's 2 months receivable this year as opposed to last year there was only 1 month, so it's just a timing difference around year end. And then there was also an increase in off-site levies. Investment in future housing relates to CCH, which is down by $2.5 million with the sale of the Peaks Landing development. And then investments are down by $5 million due to more investments classified as temporary investments under cash that are to mature within the next year. Liabilities are up by $2.3 million, and you'll see accounts payable is up by $6.9 million due to large capital projects underway at year end, payable related to the Cougar Creek retention project dispute, and RCMP additional costs payable as well. Deposits are up by $740,000 with the Alpine Meadows Land Development and Tennis Association funds, and then long-term debt is down by $5 million, mainly due to the regular repayments, and then CCH repaying their credit union loan relating to the Peaks Landing development. So when they sold the house, they paid off the debt as well. So overall, net financial assets come in at $26.9 million for an increase of $5.7 million over prior year. And then the next slide relates to the town's deferred revenue and is here strictly for informational purposes. Overall deferred revenue is very comparable to prior year, and as you'll see, the majority relates to the Alberta Community Resilience Program for the Steep Creek and Cougar Creek. Then on the non-financial asset side, inventory is down by 1.2 million due to CCH selling some of the Wolf Willow condos during the year. Tangible capital assets, there was $22.5 million in additions, offset by $11 million in amortization, resulting in the increase over prior year. The largest capital projects this year relate to the new fire station construction of $7.5 million, Cougar Creek construction of $2.8 million, the Old Canmore Road water upgrade of $691,000, South Bow River Loop Feeder Main Phase 2 of $581,000, street and drainage rehab of $559,000, and then the Quarry Lake Transportation Management Project of $503,000. And then accumulated surplus has increased by the current year operating surplus of $16 million. So this is going to be broken down by a $5.7 million decrease to unrestricted, $6.7 million increase to reserves, and $15 million increase to equity and tangible capital assets. The reserves are 100% cash covered and fully funded, and overall the town is in great shape and has a solid financial position as of year end. Any questions so far? Good.
I don't see any, and I love that last statement.
Yay, excellent. Then for reserves, again, here for informational purposes, where you'll see overall there was the increase to reserves of $6.7 million. Operating reserves are down by $635,000 with the use of the general operating and the tax stabilization reserve. And then capital reserves overall are up by $7 million. And this just relates to various increases across the multiple accounts as listed on the slide. Then for debt limits, this shows the town's total debt and servicing limits as defined by the MGA. So just remember to normalize this calculation for one-off items as it is based on the town's revenue. And this disclosure is only based on the town's number and doesn't include any of the other consolidated entities, as it may be misleading if we did. And then based on these numbers, as you can see, there's plenty of room to take on debt if necessary. Any questions so far?
Councillor Graham.
Okay. So the next part of
Oh,
our...
we have one question, sorry.
Oh, sorry.
Yeah.
There might be questions. Your last statement in that we're in a great financial position. Can you qualify that for me a little bit? What makes you say that?
Yeah, absolutely.
Thank you.
I'm just going to jump back. And when we go, like our next section of the financial statements is going to be going over the financial indicators, which will kind of show where the town sits in comparison to other comparable municipalities. But what makes it so good is, I'm just going to jump back here to the statement of financial position. So your financial assets less your liabilities does provide the town a net financial asset position, where this $26.9 million is available to fund future operations. So that is a healthy amount going forward. Also, with the statement of cash flows, you kind of saw that there was a cash surplus of the $14.5 million. And with the accumulated surplus here broken down in between unrestricted internally and equity, the reserve balance is also healthy. And you'll kind of see that in our financial indicator report, where the town is above average for unrestricted and internally restricted assets to set aside for future funding. So overall, good to be in healthy shape to help fund future operations plan for the future and capital projects.
Beautiful.
Yeah,
Thank you.
You're welcome.
Great. And I don't see any other questions, so
Okay.
please continue.
Yeah. So this is where we get into some of the graphs. So on this chart, you're going to see that there's 4 lines. The blue one represents the town of Canmore. The red one represents all the towns within Alberta. The green represents the towns with comparable populations to the town of Canmore. So that's going to be your High River, your Strathmore, your Sylvan Lake, your Stony Plain. And then the purple one represents any type of municipality, so whether it's a city, town, MD, county, with comparable populations, which relate to 15 municipalities within Alberta. So a couple examples for where we're comparing there is going to be Brooks, Camrose, Red Deer County, Strathmore, and Wetaskiwin. The comparable comparable municipalities were determined based on a range of 75% to 125% to the town of Canmore's population. So the 2022 ratio is just going to be in the far right column, which relates to the town of Canmore, and the comparable ratios are based on prior years from 2021 and prior, as the financial information returns for 2022 won't be submitted to the province until the end of this month here, but it still provides a really good basis as to where the town lands in comparisons to other comparable municipalities within Alberta, okay? So the first indicator here is going to be your assets to liabilities, which just illustrates the extent a government finances its operations by issuing debt. So the town does have 6.48 times greater assets in comparisons to its liabilities. So the town isn't financing its operations by issuing debt. So the small increase over prior is mainly due to the increase in assets, specifically relating to tangible capital assets with the capital projects that were done. The town's ratio is in line with the comparable town average and slightly under when comparing it to all towns in Alberta and any municipality with similar population. On the next indicator here, financial assets to liability, this essentially takes out the town's tangible capital asset in comparison to the previous indicator that we looked at. A ratio greater than 1 indicates net financial assets and financial resource are on hand for the town to finance future operations. So as you can see, you're well above the 1. So increase over prior year mainly relates to the increase in financial assets with the current year operating surplus. You'll see the town is above average for comparable town populations and comparable to any town within the province and municipalities with similar populations. For the current ratio, it illustrates the town's ability to meet its short-term obligations. So ratio can change based on the timing of liabilities around year-end and then the maturing of investments between long-term and short-term, because anything that matures within the next year automatically gets classified as short-term. So you want at least a 1-to-1 ratio here where the town is also well above it. So decrease from prior is mainly due to the increase in liabilities with the capital projects payable and the RCMP payable. The town continues to have a strong current ratio above the comparable town average and in line with all towns within Alberta and municipalities with similar populations. Then for the operating expense to taxable assessments, it illustrates the town's spending in relation to the growth in the economy. So 2022 ratio comparable to prior year, and then the high taxable assessments keep the town on the lower end in comparison to other municipalities just due to the property values here. Next, public debt changes to revenue measures the town's debt repayment that needs to be paid within the next year as a percentage of revenue. So the indicator remains very comparable to prior years and other municipalities. Debt to revenue percentage illustrates the growth in revenue compared to the town's change in debt. So decrease is due to repayment of debt and the increase in revenue. The town's ratio is right in line with the comparable town's average and slightly higher when compared to all towns in Alberta and municipalities with comparable populations. For the infrastructure investment, it illustrates the total cost of tangible capital assets relative to the annual amortization. So decrease from the 2.46 in the prior year to the 1.88 is due to less capital additions this year. 2020 was higher due to the work done on the Cougar Creek flow retention structure. So that's why you see the blue line kind of having that little bit of a peak there, just because that was a larger capital project that the town did. And then 2022 ratio is in the middle between all of the comparable municipalities. For the next one, own source revenue to taxable assessments, it illustrates the town's own source revenue compared to its tax base. So ratio has increased over prior year due to the higher own source revenue relating to user fees and sales of goods. The town is below comparables, but this is mainly due to, again, the higher property values in Canmore compared to other locations in Alberta. And then government transfers to total revenue illustrates the government's grants received in comparison to total revenue, which offers a perspective of the degree of vulnerability a government faces as a result of its dependence on another level of government. So decrease in ratio from prior year is due to spending less capital. The last couple of years were higher, again, like in 2020 and 2021, due to the Cougar Creek flow retention structure. So the town ratio is below all the comparables, which just means the town is less dependent on another level of government in comparison to all municipalities for the current year. But keep in mind, this indicator will fluctuate depending on municipalities' capital projects and what they have going on between all of the towns in Alberta. And then reserves to total accumulated surplus illustrates the portion of accumulated surplus that has been internally restricted for future use. So very comparable to prior years, and again, very healthy reserve balance and well above the comparable municipalities as you see in the chart. And then the last ratio shows accumulated surplus, whether it's unrestricted or restricted, available for future use, increases as a result of the current year operating surplus, and overall very healthy surplus and well above all comparable municipalities as well. So that's kind of what I was alluding to before. Just overall, the town is very healthy with having the accumulated surplus available for future use. Any questions?
No, you know, you look at the financials every year, and it's a lot of the same sort of things, but I really get a lot out of these graphs.
Yeah.
And so I really appreciate that analysis.
Yeah, yeah,
So
absolutely.
it's very helpful.
Yeah.
Looking to see if there's any questions. And seeing none.
Okay, so the next part of our presentation just relates to the audit letters, which I believe you want to do in camera.
Yeah, so I know we do the interview in camera. Do we do the letter in public or in camera?
We can't do either. So
Yeah, let's,
Yeah.
the letter is in public, and let's just do the interview in camera. Okay, so please
Proceed?
proceed, yes.
Okay, perfect. There we go. So for the management letter, we have no significant issues or recommendation to bring to your attention. And we do want to thank the town's accounting team for being so great. They really do put in a lot of work in prepping for the audit and then actually going through the audit and answering all of our questions and providing us support to verify the town's numbers. The town has a very strong accounting team here and are very, very lucky to have them. And then for the post-audit letter, it summarizes we didn't come across any illegal acts or fraud. There was no disagreements with management and no difficulties encountered during the audit. And the post-audit letter also has an emerging issues section, which relates to future accounting changes coming into effect in the coming years. So the big ticket item this year for our clients is going to be that asset retirement obligation, where liability needs to be accrued for if an organization has a legal obligation to incur retirement costs associated with any of their tangible capital assets. So a legal obligation can arise from government legislation, regulations, contracts the town has entered into, agreements, etc. This standard is in effect for fiscal years beginning after April 1st, 2022. So it would be applicable for the 2023 year end of the town. So the most common asset retirement obligations that we do come across is going to be asbestos in buildings built prior to the 90s, underground fuel tanks, landfill sites, gravel pits, etc. So be aware of this standard in the instance that the town does have any legal obligations to incur retirement costs associated with their capital assets. And then all of the remaining standards here won't have a significant impact. So that ARO is just the big ticket item this year. And that concludes the letters. Any questions?
Councillor Ma.
Thank you, Your Worship. With regards to the last piece about assets that we need to retire, like I'm on the Waste Management Commission, and we had to change the financial process for, say, the landfill, which was a very significant change. Do we have anything in that sort of category, such as yours, to admin, that we need to be flagging that we don't know?
Sorry, I'm having troubles hearing you.
Yeah, sorry. Is there anything, question to admin or auditors, is there anything that's going to, that you see as you flag as a big potential risk coming forward? For example, with the landfill, we had to change the accounting procedures, as you mentioned, for the new legislation. Is there anything for us besides like a bit of asbestos in buildings or any obligations? I'm trying to understand the magnitude we might be on the hook for.
All right. Let's go with Ms.
Thank
Smithers.
you. We would be retiring Pump House 2 when the new water treatment plant is built, but that has been scoped as part of the project.
Okay.
So it's not, we know it's there, it's not a risk.
Okay, great. Thank you.
To this extent, yeah.
Okay, Thank you, Ms. Smithers. Any other questions? Ms. Cotter?
I'm wondering if I can just add to that, and we maybe can talk a bit more about this in the next presentation with Ms. Biswa and Ms. Rogers, but to the auditor's point about us being in a good financial position, which is always great to have them verify, and to Councillor Graham's question, the other thing that we know is that when we look at our long-term needs in terms of assets, utility, right, and infrastructure, and that we aren't saving enough yet for our long-term financial strategy. So even though we're in a good financial position philosophically, we also know we have longer-term needs based on our financial plan that we aren't yet saving enough for. And those two things maybe can seem a bit contradictory and maybe are getting at part of what you're asking about there, Councillor Ma. But our long-term financial strategy does try to identify future needs based on tangible capital assets, infrastructure that we know will be phasing out, plus other planned changes. And the current good financial position is kind of separate from that long-term planning, which is a bit more of what administration has been flagging. So we are tracking those things in terms of aging infrastructure, and there's not anything coming immediately, but we know it's coming eventually, right? Knowing the history of Canmore and when roads and sewers and those kinds of things were built. So I don't know if Ms. Biswa or Ms. Rogers want to also jump in and comment on that, but I feel like those things might be connected, but they're also different. And now that just feels like I've confused it more. Sorry.
I think you did a great job, Dr. Cottle. I would just say the results you're seeing today are a point in time, which is today. And as Dr. Cottle said, it does not factor in or consider all of what's coming down the pipeline for us, which includes a number of very significant asset rehab and replacement projects that we're committed to based on our asset infrastructure that we have. So it does sound contradictory based on the message we've been giving, but it really is that point in time discussion. This is a summary of 2022. And at that point in time, we're very healthy and we're healthy compared to our competitors. It does not consider or factor in what's happening in the next few years.
Yeah, and to that end, that's also why in our current budget, we made sure we didn't cut out contributions to reserves, which when you have a larger increase is the thing that's typically very tempting to do. But for the long-term health of the organization, it was important to keep those reserves going, and we're going to keep at it. Of course, infrastructure deficits and gaps are something that every municipality deals with, and we want to be one of those to deal with it better than others. Councillor Graham?
Thank you, Your Worship. Along those lines, does administration have any plans to bring us like a 25 or 50-year capital asset replacement strategy or plan? Is there? How do we know we're doing this well?
Well, we have one. Dr. Cottle or
It looks like Ms. Rogers.
Ms. Rogers?
Thank you. We are revising and updating our long-term financial strategy to take into account our current situation and what we know today and how that will impact our future. So our current strategy is relevant and we're going to update it with our current information so we can answer your question appropriately.
Thank you.
Ms. Smithers?
I would add to that next month we'll be bringing to Council for information the revised utility master plan, which takes a 25-year look to kind of build out of the community essentially to identify infrastructure related required to growth, but it also does account for life cycling. So you'll be seeing that as well.
Great.
And then that, sorry, is an input into our capital plan, which is that longer term lookout.
Great. Thank you. Any other questions or comments? Seeing none, I am going to move then that the Finance Committee take the meeting in camera to prevent disclosure of personal evaluations in accordance with Section 17 sub 4 sub F of the Freedom of Information and Protection of Privacy Act. All those in favor? Carried unanimously. Okay, so we will have And streaming. Okay. All right, so we are back out of camera, and I will now move that the Finance Committee approve the Town of Canmore's audited consolidated financial statements and financial information return for the year ended December 31st, 2022 as presented. Would anybody like to speak to that motion? Councillor McCallum.
Thank you, Your Worship. This is a process we go through every year, and considering the state of the world in the last 3 years, I'm quite grateful that we have an audit that shows that we still have a strong financial position, and that, that is in part to the, as you mentioned before, Your Worship, the processes that we've had in place and we've been working on over the last decade, if not longer. But more importantly, the funds that we've put aside, although not enough to deal with our long-term plans, and we're working towards that. It has got us through fires, it has got us through floods, and has clearly got us through a pandemic right now. So although the corporation's in great shape, I think it gives us space and relief to be able to continue to reach out to the community that are still suffering from the pandemic, and know that we can do that with a strong financial backbone. Thank you.
Thank you. Anyone else? Seeing none, I'll call the question. All those in favor? Carried unanimously. I'll now move that the Finance Committee accept the 2022 management letter, post-audit letter, and the indicators of the town's financial condition from the auditors. Any discussion on that? I would like to give thanks to our finance team for all of the great work that is done. This is obviously a glowing review, and from a very experienced auditor, that says a lot. And I would like to thank Avail once again for your service to the town of Canmore in providing our audit. And I'll call the question. All those in favor? Carried unanimously. So thank you. We will now move on to item D3, 2022 Administrative Financial Report. And is that Ms. Biswas will be presenting, correct? Okay.
Yes.
Excellent.
Thank you. Morning again. So I'd like to continue the presentation from here on, and both the next two topics are combined into one presentation. And you can pause me at any time for any questions. So overall, as you just heard, we had a good financial year. In short, next slide, please. We ended the year in a net financial asset position, a small surplus, well-managed debt and reserves. Next slide, please. Starting with the operating results. Next slide, please. As you can see on the slide, out of a total budget of $61.5 million, the year ended with a minimal surplus of $243,000, which is 0.40% of the approved budget. Some areas continued to experience post-pandemic effects in 2022. Next slide, please. As Ms. Lutz alluded to, the surplus of 2022 excess of revenue over expenses as $1.1 million. I'd like to explain the bridging effect and what's the difference between the Town of Canmore's internal statements versus the financial statements. So the audited financial statements are prepared in accordance with the public sector accounting principles, which are a little different in presentation than our internal statements. Our internal statements are focused around determining the municipal tax requirement. It is all the same information, just presented differently. So this is how the reconciliation works of the $243,000 over the $1.1 million. The difference is due to the addition of transfers to reserves, capital revenues, and debenture principal, which get added on, and then subtracted the transfers from reserves, non-TC expenditures, amortization expenses, and the loss and disposal of tangible capital assets, which brings us to the operating surplus of $243.26. Next slide, please. Just a little bit around how we did in 22 with regards to revenues. We ended the year with an increase in revenues. Some lines of revenues have fared better than expected. 22 continued to see higher revenues from supplementary taxes, franchise fees, interest earned on investments, business licenses, paid parking, development permits, off-site development levies. But all these increased revenues have been transferred to specific reserves per policy and therefore do not impact the surplus bottom line. Next slide, please. The town also suffered reduction in recreation revenues as drop in sales, facility rentals, and memberships did not fully recover from the pandemic, along with service disruptions in the aquatic center. Fine revenues were also impacted during the year. Next slide, please. Moving into expenses. Coming out of the pandemic, we saw volatile macro and microeconomic conditions, such as fuel costs, energy costs, commodity prices and interest rates, as well as supply and demand for products and services. There were increase to unavoidable expenditures such as repairs and maintenance, related purchases of materials and supplies, legal expenses, and recruitment costs. One item to note is the RCMP contracted services, even though we did not come in over budget, but I think it deems a mention. At the end of 2022, close to $1 million is owed to RCMP, $521,000 for the 2017 to 2021 RCMP raised. Based on our population increase, we found out in March of this.
Can you hear me?
Yes.
Yeah, we're having a little problem with our screen here, so I'll just ask you to pause for just a moment.
Okay.
Oh, I think we're back. Okay, so we're good now. Please proceed.
Okay, awesome. As I was mentioning about RCMP, we had two retroactive payments. One, the $521,000 for the 2017 to 2021 retroactive RCMP raise costs, as well as our population increase of more than 15,000. Our billing share has gone up from 70-30 cost share split to a 90-10, and about $475,000 for the 3 quarters of 2022 is still owed to RCMP, and we had budgeted for that. Attachment number 2 in your package today provides detailed variance explanations by each division and departments. Next slide, please. So the surplus of $243,026, as I mentioned, is 0.4% of the total approved budget. The surplus allocation recommendation from administration, this is one of the ways it can be allocated. It's such a minimal surplus. We thought it's best to return some of the funds that were drawn from reserves during the year that were unused. We had a draw of $220,000 made from the development application reserve to fund 2 positions for planning and engineering departments that were approved by council in April of last year when 2021 year-end results were brought forward and this new reserve was created. $172,000 of the 222 remain unused till year-end, and therefore it's been recommended to be put back into this reserve. A draw of $600,000 was made from tax stabilization to mitigate the high costs of RCMP and fire. We have similar draws of $600,000 in 23, as well as another draw of $600,000 in 24 as well in our budget plan. The unused portion of the RCMP contracted costs and remaining amount of the surplus, which amounts to $71,026, be returned to the tax stabilization reserve. Next slide, please. Moving into the capital results for 2022. Next slide, please. We had a total of 116 active capital projects ongoing in 22, of which 46 projects were completed. 69 projects are being carried forward to 2023. Total capital spending, including work in progress, was $21 million out of a budget of $54 million. $32 million worth of capital projects are being carried over to 2023. A summary of all active projects is in attachment number 3 of your package today. Also have a separate report prepared for the capital projects that summarizes the project status, funding, the projects that are complete, with closeout sheets, as well as projects that are being carried forward in the next agenda item. Next slide, please. Just a little snippet around the reserves. Next slide. As you heard in the presentation earlier, we did good overall in our reserves balances. As of December 31st, the balance in the reserves totaled $62.7 million, of which $7.2 million is for property tax stabilization and general operating reserves. $41 million is for replacement of existing equipment, infrastructure, and future capital projects. $14.5 million is for utility rate stabilization and funding of utility structure. Attachment number 4 provides a detailed listing of all the ins and outs of the reserves. Next slide, please. Touching upon grants or deferred revenue a bit here. Next slide, please. As you saw in the financial statements, we have about $19 million in balance in our deferred revenue account as of December 31st, 2022. This comprises of all the grants that have been received over the years, but were not used by the year end. All these grants have been allocated to current and future capital projects. Next slide, please. In conclusion, I just wanted to draw Finance Committee's attention that in the past few years, contributions to reserves had been reduced to achieve lower tax rates. Each year, town has relied heavily on having an annual surplus and be allocated back into these reserves that had been reduced at budget time. The annual surpluses for the town has been ranging from $1.5 million to $3 million, with permit revenues from engineering and planning departments being one of the main contributors to the surplus. Now, with the change in the reserve policy, the surplus is quite minimal. So the long-term financial risk in this approach is that, as Ms. Rogers mentioned, the town has enough significant dollars saved for addressing long-term asset rehabilitation and replacement needs. We are working on the long-term strategy plan to bring forward different recommendations to council in the upcoming budget discussions. Next slide, and that's my last slide, is that Finance Committee accept the 22 year-end financial update for information and approve the allocation of the 22 operating surplus of $243,026 into the following reserves: $172,000 to the development application reserve and $171,026 to the tax stabilization reserve. Questions?
That's a good question. Looking to council. I see no questions. Thank you. All right, then. I will then move that the Finance Committee accept the 2022 year-end financial update for information as presented. Speaking to the motion, I appreciate all that you've just gone through with us and provided in our agenda package. It's a comprehensive look and very much appreciated. Seeing no other comments, I'll call the question. All those in favor? Carried unanimously. I'll now move that the Finance Committee approve allocating the 2022 operating surplus of $243,026 into the following reserves: $172,000 to the development application reserve and $71,026 to the tax stabilization reserve. Would anybody like to speak to that motion? I think the rationale for these is very good, and it's a very small surplus, so I have no concerns with this allocation whatsoever. Call the question. All those in favor? Carried unanimously. And you combined both of the presentations, so with the capital project summaries, was there anything else, or can I move to that? I can move to that motion. Okay.
You can, sir.
So I move that the Finance Committee accept the 2022 capital project summaries as presented. Any comments on that motion? Seeing none, I'll call the question. All those in favor? Carried unanimously. And with that, I will move that we adjourn this meeting of the Finance Committee. All those in favor? Carried unanimously. Thank you.